Hello and welcome to the DeFi Development Corp Fireside Chat. My name is Adam Lowensteiner, Vice President of Lytham Partners, and today I'll be moderating a Q&A discussion with Mr. Joseph Onorati, Chief Executive Officer at DeFi, who trades under the ticker of DFDV on the Nasdaq. Let's get started. Hi, Joseph. Welcome.
Hey Adam, thanks for having us.
Maybe to kick things off, can you tell us a little bit about yourself and DeFi Development Corp?
Yeah, sure. So like Adam mentioned, I'm the CEO of DFDV, DeFi Development Corp. We're the first Solana treasury strategy company in the US, and maybe quick background on treasury strategy companies. So there's this wave, I'd say, of cryptocurrency or digital asset treasury companies that have been sort of spawned or initiated by MicroStrategy, formerly MicroStrategy, now Strategy. And our company's mission is to drive Solana per share growth. So Solana is a smart contract based crypto asset, a layer one, as they are referred to. Um, and we basically accumulate Solana, hold it on the balance sheet, and offer leveraged exposure in a risk managed way to the underlying asset, Solana, via investing in DeFi Development Corp, DFDV. We additionally run our own validators and we participate in the Solana DeFi ecosystem through uh, a partnership for the issuance of a liquid staked token named DFDV Sol, which is integrated across most of the biggest decentralized financial products on the Solana ecosystem.
So DeFi recently went public, correct? Give us a brief overview of that process and what made you decide to list.
Yeah, well, we went public via a change of control transaction with a previously listed company. The company's name before was Janover, JNVR was the ticker. Um, and some uh, some of my team and myself basically bought over half of the shares of Janover and uh, added ourselves as board members and to the management team and transitioned the strategy or the treasury strategy of that company to focus on SOL accumulation. But the legacy business, which was a real estate professional SaaS platform, continues to operate with the previous founder and CEO hanging around as our chief commercial officer, and the previous CFO moved into the role of EVP finance.
So let's talk crypto. Your core focus today is on building a treasury around Solana. What exactly does that mean? What does it mean to be a crypto treasury company?
Yeah, thanks. Yeah, I touched on this just a bit before. So, MicroStrategy kind of started this trend back in late 2020 when they started accumulating Bitcoin and holding it on the balance sheet. And since then, MicroStrategy has outperformed Bitcoin by approximately 3x. And that's possible because they're able to essentially leverage up on the underlying asset using their access to public market fundraising instruments. So that could be convertible debt, or maybe it's preferred stock issuance, or maybe it's just new share issuance when it's accretive to investors on a crypto treasury asset per share basis. So uh, we say that we are evolving the MicroStrategy playbook and have a focus on Solana. So uh, we we basically raise capital, buy Solana, hold it on the balance sheet, and then stake it to our own validators, which generates about, say, 9.5% yield on our relatively high-performing validators compared to the rest of the network. And then we also have recently done a convertible debt financing led by Cantor Fitzgerald, which allowed us to accumulate more SOL. And we have what's called an equity line of credit in place, which is structured very similarly to an ATM, an at-the-market new share issuance program, that allows us to sell new shares into the market the when it's accretive on a SOL per share basis to all investors. So our mission longer term is, of course, to grow Solana per share. The whole company is focused on this Solana per share metric. Our incentive programs are aligned around it. It's in our email signatures. It's on the very top part of our website. It's the core focus of the business. So if investors want exposure to Solana, the best way to get it in the public markets is through DeFi Development Corp, DFDV.
Mhm. So why Solana? What's your thesis on SOL compared to other assets like Bitcoin or Ethereum?
Yeah. So I'll reminder, we were the first non-Bitcoin treasury company listed in the US, which I mentioned before. And we could have picked any asset, um, really, but we picked Solana. And the reason for that is I guess personal in some ways. So I've been actively participating in the Solana DeFi ecosystem since mid 21, along with kind of my co-founder Parker White, who's the COO and Chief Investment Officer at DeFi Dev Corp. So I'd say we both have kind of roots in the Solana ecosystem. I've also been working in the crypto space where I've been working at crypto exchanges since 2013. So have quite a bit of kind of history of exposure to these assets, and Solana's just outperforming the other smart contract chains on transaction throughput, user growth, um, even growth in total value locked. It's referred to TVL, like essentially assets tied into the Solana ecosystem. But we think that this is underrepresented in the total value of the asset, where Ethereum's market cap is still approximately, what, 3 or 4 times Solana's market cap. Um, so we think there's a significant upside, and we think essentially most of the growth in decentralized finance is actually taking place in the Solana ecosystem. So kind of given our prior experience and exposure to Solana, on a kind of personal level, and also just the metrics that we tweet about frequently, by the way, and you can check out the company's Twitter account for a bunch of information on these metrics on Solana. It made a lot of sense for us to choose that. Now, also for a treasury strategy, I think Solana makes a lot of sense in particular. Not just, that it's a great asset for this sort of thing, but as in, how do I put this? So, so uh, with Bitcoin, there's no underlying yield, and with Solana there is. So one can stake Sol and earn, like I mentioned before, approximately 9.5% when staked to one's own high-performing validators or DFDV's validators. And then Solana is also more volatile than Bitcoin. And the volatility of the underlying asset is important for the treasury strategy companies because the volatility leads to improved pricing on convertible debt fundraising, which is part of the flywheel for capital raising at a premium to net asset value. Um, and third, there's actually stuff that one can do or that a company can do to participate in the Solana ecosystem to drive additional yield. For example, there are um, vibrant lending markets, there's decentralized exchanges on Solana, and many other, more complex financial kind of companies and products built on top of Solana that can't be built on top of Bitcoin because Bitcoin doesn't facilitate the type of you know programmability that Solana brings. Now, I think Bitcoin's great, and I think Bitcoin's money, but Solana's fuel for decentralized finance.
You measure performance using something called SOL per share, SPS. Can you explain that metric and why it matters more than just the total amount of SOL held?
Yeah. So with the way that these treasury vehicles work, there's a another metric called MNAV, the net asset value multiple or multiple on the net asset value. So if a company just traded at 1x NAV, basically the company's market cap is equal to its assets on balance sheet for, say, one of these treasury companies, then if the company went out and raised money, it's 1 to 1, like one new share issuance equals, the same amount of Sol or ETH or Bitcoin or whatever added to the balance sheet. So it's not accretive to investors to raise capital at 1x NAV. It's equally dilutive as it is as the amount of fundraisings coming in. So we've kind of devised this metric, Sol per share and Sol per share growth, and made it the focus of this business because we think ultimately that's what investors care about, and that's what investors are buying when they buy the stock. They're buying access to this underlying Sol and the future growth of the balance sheet on a per share basis.
You mentioned growing Solana per share, SOL per share, using capital markets. Can you walk us through how you're using equity, convertibles, or other instruments to accumulate more?
Yeah, yeah. So I touched on some of these earlier. I'll just run through them. So we have in place an equity line of credit, and this is kind of a misnomer in some ways, but the way ours is structured is very similar to an ATM, the at the market kind of new share issuance, where a company can essentially just sell stock into the market at the market price. And uh, when when a treasury strategy company trades at a premium to its net asset value, an MNAV that over 1, um, preferably much higher than 1, then that additional dilution is accretive on a crypto asset per share basis. So that's kind of the primary fundraising method for these companies. We see it with MicroStrategy. We see it with many of the others, and also with DFDV. The next is convertible debt, and of course this was heavily used by MicroStrategy as well. And I mentioned earlier we previously did a convertible debt fundraise with Cantor Fitzgerald. Um, and the way these are structured is there's typically a coupon payment. So it's debt. The company is issuing a bond. Um, and there's the coupon payment, like an interest rate that the company has to pay on the debt. There's a duration on the debt, in our case, 5 years. And then the debt is convertible into stock under certain conditions. So the investor can convert the debt to stock if the stock appreciates. Um, and in other cases, the company can uh, encourage or potentially even force a conversion of the debt into stock if the stock price is high enough, the common stock price is high enough. So that's another kind of primary fundraising method that we see employed by these vehicles and has also been employed by DFDV. And then for other instruments used to accumulate SOL, there's a few methods. Um, after the uh, so years ago, the Solana Foundation sold some uh, locked and vesting Sol tokens to some major investors, including Alameda, which was a part of FTX. And with the FTX and Alameda bankruptcy, some of those assets were sold off, and there's still locked sol vesting locked sol discounted um, floating around there or out there that can be purchased. So DFDV has participated in purchasing this discounted locked sol, which has a weighted average maturity of approximately 1.3 years. It finishes vesting out in early 2028, and we're able to buy that at a discount in, say, the mid-teens. Um, and when we buy that locked sol, we can still stake it and continue to earn yield on the sol while it's locked. So that's been another, um, say, a creative way for us to grow our sol holdings and therefore our sol per share. And there's probably a few other financing methods out there that are less capital markets focused, but public capital markets focused, but more kind of crypto native. Um, I won't get too into them, but the company has, I'd say, ample uh, access to methods of fundraising, and it's diverse. It's broader than what we've seen employed so far by other digital asset treasury companies. One that I forgot to mention that I think should be touched on is preferred stock issuance. This is another method of capital raising available to public companies. And I think we've seen at least two treasury companies issue preferred stock. And DFDV has not, but that would be um, another capital markets tool that could be available to the company.
So some critics out there say crypto treasury vehicles, these CTVs as they're known, are the new bubble. What separates DeFi, from the rest of the pack?
Yeah, this is an interesting point, I think, because there do seem to be many of these vehicles coming to market, um, and I think there are many deals in the pipeline. And I've tweeted that that I think there's a tsunami of these coming, even for lower tier assets. Maybe even the top, 50 or top 100 crypto assets might have crypto treasury vehicles. Um, and it might be a bubble, but it could also be that the total addressable market for uh, public vehicle demand for crypto is actually much higher than what we've experienced to date. And I think this is uh, partially played out with the ETFs on Bitcoin and then Ethereum. And it turns out that crypto treasury vehicles might actually just be a faster way for some of the lower tier assets to get access to public markets. They don't have to have an ETF approved when they can get to market with a crypto treasury vehicle faster. And in some ways, these are similar because they both give exposure to the underlying asset. Um, but I think the crypto treasuries are superior because they actually can outperform the underlying asset. And of course, we've seen this with MicroStrategy, and I think you can see it with DFDV, where for various recent periods, we have grown SOL per share by over 50% in, a 30-day day window. And then I'd say what separates us from the rest of the pack is actually the team here. So I haven't talked much about this, but the team that we put together for the treasury part of this business are all former Kraken team members, and Kraken's one of the largest cryptocurrency exchanges. And I worked there for about 8 years, most recently as the chief strategy officer. And um, the group of people that we brought in are strongly Solana native. They're DeFi native, and um, I think with that team, we've been able to go deeper into the DeFi ecosystem on Solana, and actually deeper across any ecosystem than any other crypto treasury vehicle has to date. And I think that's to date our major differentiator. We also recently announced a new program that we're calling DFDV Treasury Accelerator, where we are looking to partner and facilitate the launch of crypto treasury vehicles in other geographies. So, for example, maybe there would be a listing of a Solana treasury vehicle in Japan or in India or France, um, or other countries around the world, and DFDV would support that business and maybe offer validator infrastructure or audit support or essentially kind of a la carte service provision based on what we think that entity needs, based on what team is in place in that entity. And in exchange, we would take an equity position there. And we haven't seen anybody else doing this outside of Bitcoin. So I think that's another longer term key differentiator for DFDV and where we have been spending quite a bit of time.
What role do validator operators and DeFi integrations play in growing your Solana holdings?
Yeah, thanks. Yeah, good question here. So there's a few roles they play. So first, I mentioned the validator. We run our own validator. We brought in Parker's validator, who I mentioned earlier as COO and CIO. He's been running validators in the Solana ecosystem for about 2 years now, and uh, so we stake all of the non-locked sol, or nearly all of the non-locked sol, to our own validator, and that allows us to earn a yield that's higher than the yield earned by uh, other holders of Solana who might stake to third-party validators because we get to keep all of the economics because we're running our own validator. So there's no split between what a staker earns and what the validator earns for us. We earn it all. And then additionally, all of that then passes up to Solana on the balance sheet, which uh, appears in our Solana per share metric, which is again the company's primary metric. We also can receive third-party delegation, so other people can stake to our validator, and then we get a portion of the economics on that stake, which again is denominated in SOL and flows up to SOL per share. Then on the DeFi integration side, I mentioned earlier that we have a liquid staked token named DFDV Sol, and this was created by Sanctum, which is a Solana um, project, but it's been branded DFDV Sol, and we have a revenue share with them, so anyone can mint DFDV Sol uh, by staking their Sol to our validator, and then with that DFDV Sol, they can use uh, their Solana tokens that are then already staked as a collateral asset to trade elsewhere or to borrow against. So we can earn some revenue there. Um, I think. Then also we do some borrowing and lending in the Solana ecosystem markets like Camino or Drift, and that has the capability to help us kind of juice our yield on our Solana balance sheet assets. But we do this in a fairly risk managed way, and it's a risk managed way, period. And it's a relatively small percentage of our balance sheet for now. But we hope to grow that focus in the business longer term.
What's next for the company? More capital raises, product launches, or international expansion?
Yeah, thanks. Yeah, like I mentioned, we're pretty focused on the DFDV Treasury Accelerator, which hopefully will facilitate this international expansion where uh, foreign treasury companies will list in foreign jurisdictions with their own teams and their own boards, and we'll support them and take an equity stake in those businesses. We're pretty excited about that. And then Of course, I can't make specific comments about capital raising, but certainly the sort of purpose of the company or in order to accomplish the purpose of the company, which is to drive SOL per share growth, um, there must be additional capital raising to accumulate more SOL in a way that's accretive to investors on a SOL per share basis.
Thank you, Joseph, and thank you for everyone for watching today. If you have any questions or would like to schedule a meeting with DeFi Development Corp, please send me an email at lowensteiner@lythampartners.com. We have more presentations and fireside chats coming up next, so stick around for more. Thank you and have a great rest of your day.
Thanks, Adam.